picture this. You have $0 invested, zero. No stocks, no funds, no crypto, no retirement account, nothing. Just a paycheck coming in and bills going out. That was me not too long ago. And honestly, if I had to start all over again today in 2025, I wouldn't panic. I wouldn't feel lost, because now I know exactly what I'd do. Step by step, no guesswork. My name is Chubby, and in the next few minutes, I'm going to walk you through the exact roadmap I'd follow, from absolute zero to building real, lasting wealth. No get-rich-quick nonsense, no complicated jargon. Just a clear, simple plan that actually works. So if you've ever felt like investing is too confusing, too risky, or just not for people like you, stay with me, because by the end of this video, you're going to see that it's a lot simpler than you've been told. But here's a disclaimer. This video is for educational and entertainment purposes only and does not constitute financial advice. Please consult a licensed financial advisor before making investment decisions. Now, let's get into it. Section 1, the Mindset Reset. Before we touch a single dollar, we need to talk about the number one thing that stops most people from ever investing. And it's not money, it's their mindset. Most people think investing is for rich people, for people with extra money sitting around, for people who understand the stock market. But here's the truth, and I need you to really hear this. Investing is how you become wealthy. It is not something you do after you become wealthy. Let me say that again. Investing is not the reward at the end of the journey. It is the journey. The average millionaire didn't get rich from their salary. They got rich because their money was working for them. 24 hours a day, 7 days a week, while they slept, while they worked, while they lived their life. That's the power of investing. And it's available to everyone, including you, starting today. So the very first thing I'd do if I started from scratch is this. I'd make a decision. A firm, non-negotiable decision that I am going to become an investor. Not someday. Not when I have more money, now. That decision alone puts you ahead of the majority of people walking around out there. Okay, mindset locked in. Now let's talk money. Section 2, get your financial house in order. Here's something most investing videos won't tell you up front. Before you invest a single dollar in the stock market, you need to do two things first. Step 1, build a small emergency fund. I'm not talking about 6 months of expenses right away. I'm talking about a starter emergency fund, $500 to $1,000. That's it. Why? Because life happens. Your car breaks down, you get a surprise bill. And without that cushion, the first thing you do is pull money out of your investments at the worst possible time. So before anything else, $500 to $1,000 sitting in a high-yield savings account, untouched. Speaking of high-yield savings accounts, if you're still keeping your emergency fund in a regular bank account earning 0.1% interest, stop right now. High-yield savings accounts are offering anywhere from 4% to 5% interest. That means your emergency fund is actually growing while it sits there. Step 2, eliminate high-interest debt. If you have credit card debt at 20%, 25%, even 30% interest, paying that off is the best investment you can make. Think about it. If you invest in the stock market, you might earn 8% to 10% a year on average. But if you're paying 25% interest on debt, you're losing more than you could ever gain by investing. Pay off the high-interest debt first. It's not glamorous. But it's math, and the math doesn't lie. Once you've got your starter emergency fund and your high-interest debt is gone, now we're ready to invest. Section 3, understand the basics, so you've got some money ready to invest. Now what? First, let's quickly understand what you're actually doing when you invest. When you buy a stock, you're buying a tiny piece of a real company. When that company grows and makes money, your investment grows too. It's that simple. Now, the stock market goes up and down, we all know that. But here's what most beginners don't know. Over long periods of time, the market has always gone up. The S&P 500, which tracks the 500 largest companies in America, has returned an average of about 10% per year over the last century. Through recessions, crashes, pandemics, wars. Over the long run, it has always recovered and reached new highs. So the strategy isn't to predict what the market is going to do tomorrow. The strategy is to stay in the market long enough to benefit from its long-term growth. Now, the second thing you need to understand is compound interest. And this is where it gets exciting. Compound interest means you earn returns not just on your original money, but on all the returns you've already made. It's interest on interest, growth on growth. Here's a simple example. If you invest $200 a month starting at age 25 with a 10% average annual return, by age 65 you'd have over $1.2 million. The same $200 a month starting at age 35? Just $456,000. 10 years of delay cost you over $700,000. That's the power and the urgency of starting now. Section 4. The exact investing roadmap. Here's the part you've been waiting for. The exact steps I'd take, in order, starting from zero. Step 1. Open a tax-advantaged retirement account. The very first investing account I'd open is either a 401(n) or a Roth IRA, depending on my situation. If my employer offers a 401(n) with a company match, I'd contribute at least enough to get the full match. That match is literally free money, an instant 50% to 100% return on your contribution. There is no better deal in investing. If I don't have access to a 401(n), or once I've maxed out the match, I'd open a Roth IRA. A Roth IRA lets your money grow completely tax-free. You contribute after-tax dollars, and when you retire, you pay zero taxes on the withdrawals. Zero. In 2025, you can contribute up to $7,000 a year to a Roth IRA. That's about $583 a month, or roughly $19 a day. Step 2. Invest in index funds, not individual stocks. Now here's where most beginners go wrong. They try to pick individual stocks. They buy the hot stock of the moment. They follow tips on social media, and most of them lose money. As a beginner, and honestly even as an expert, the smartest thing you can do is invest in index funds. An index fund is a single investment that automatically holds hundreds or even thousands of companies at once. When you buy one share of an S&P 500 index fund, you're instantly invested in 500 of the biggest companies in America: Apple, Microsoft, Amazon, Google, all in one. You get automatic diversification, low fees, and historically strong returns. Warren Buffett, one of the greatest investors who ever lived, has repeatedly said that most people, including professionals, would be better off just investing in a simple S&P 500 index fund. If it's good enough for Warren Buffett's advice, it's good enough for us. Step 3. Automate your investments. This is the secret weapon that most people overlook. Once I'd set up my account and chosen my index fund, I'd automate everything. I'd set up an automatic transfer, every single payday, straight into my investment account. I wouldn't think about it. I wouldn't second guess it. I wouldn't wait to see what the market is doing. Why? Because the biggest enemy of investing success isn't the stock market. It's your own emotions, fear, greed, hesitation. When you automate, you remove emotion from the equation entirely. You invest consistently, whether the market is up, down, or sideways. And that consistency is what builds real wealth over time. This strategy even has a name. It's called dollar cost averaging. And study after study has shown it outperforms trying to time the market for the average investor. Section 5. Level up. What to do next once you've got the basics running on autopilot. Here's how I'd level up. Build your second income stream. Investments are one form of passive income, but there are others. Dividend stocks, real estate investment trusts, also known as REITs, and even creating digital products are all ways to build income that doesn't require trading your time. As your portfolio grows, you'll start receiving dividends. Small cash payments companies make to shareholders. Reinvest those dividends automatically, and you're accelerating your compounding even further. Keep educating yourself. The more you understand money, the better decisions you'll make. Read books like The Psychology of Money by Morgan Housel or The Little Book of Common Sense Investing by John Bogle. These aren't textbooks. They're genuinely engaging reads that will change how you think about wealth. Increase your contributions over time. Every time you get a raise, a bonus, or a side hustle payout, increase your investment contribution. Even going from $200 a month to $300 a month can add hundreds of thousands of dollars to your final number over a 30-year period. The goal is simple. Earn more, spend intentionally, invest the difference, and let time do the heavy lifting. So let's bring it all together. If I started from scratch in 2025, here's exactly what I'd do. First, shift my mindset. Decide to be an investor, starting today. Second, build a small emergency fund and kill the high-interest debt. Third, open a Roth IRA or max out my 401 match. Fourth, invest in simple, low-cost S&P 500 index funds. Fifth, automate everything and never stop contributing. And sixth, keep learning, keep growing, and increase my contributions whenever possible. That's it. No secret formula. No magic stock picks. Just a clear, consistent, proven plan executed over time. The best investor isn't the smartest person in the room. It's the most consistent person in the room. And you can be that person, starting today. Starting with whatever you have. So here's my challenge to you. Take one action after watching this video. Just one. Open that Roth IRA, set up that automatic transfer, download that book. One step today leads to a completely different financial life tomorrow. If this video helped you, please hit that like button. It genuinely helps this channel grow and reach more people who need to hear this message. Subscribe so you don't miss the next video, and drop a comment below telling me, where are you starting from today? 0, a little bit invested? I read every single comment. I'll see you in the next one.